A tiny NASDAQ company pivots from wireless home audio to AI plus Web3 data monetization. Acquires patents, rebrands, launches data unions, even announces a $150 million strategic investment to build supercomputing capacity, then gets slammed by a high-profile short report. Datavault AI, formerly known as WISA Technologies, a penny stock that's burned through cash for years, never turned a profit, and has diluted shareholders into oblivion, has completed a fundamental strategic pivot, is shifting from a niche acoustic technology business to a dual-focus company centered on data monetization through Web 3.0 and artificial intelligence solutions. The core of this new vision is the strategic acquisition of intellectual property from Datavault Holdings and CompuSystems, establishing two distinct operating divisions: data sciences and acoustic sciences. The stock rallied from pennies to over $4 in months. Management says they've never been more optimistic. IBM is a partner. Institutional investors are backing them. Welcome back to the Capital Navigator, where we explore the strategies, business models, and financial realities of the world's most influential companies. Today, we're analyzing Datavault AI Inc. We'll cover the company's origins and transformation, the business model and technologies they claim to be developing, the alarming financials showing chronic losses and dilution, the explosive stock performance, the devastating short seller report from Wolfpack Research, and the massive risks investors face. This is not your typical analysis. This is a cautionary tale about speculation, hype, and the dangers of chasing momentum in penny stocks. Let's dive in. The origins. From wireless audio to data and AI. The history of Datavault AI is a narrative of profound metamorphosis. The company migrated from being a specialist in wireless audio technology to a technology licensing company, whose current focus is on data monetization driven by artificial intelligence and Web 3. The company's roots trace back to its original founding as Summit Semiconductor in Delaware on July 23, 2010. Its initial objective was simple yet ambitious: developing high-definition wireless audio chips. The company operated by providing best-in-class, immersive wireless sound technology through the sale of modular components to audio companies and audio products to resellers and consumers. This focus positioned it as a technical leader in delivering multi-channel sound without latency. A crucial milestone in this first phase was the acquisition, in April 2014, of WISA, Wireless Speaker and Audio Association, from Silicon Image. This move gave the company full control over the WISA standard for high-fidelity wireless audio, securing its technical dominance in this niche. During this period, it focused on audio modules such as WISA HT, targeting the audiophile market, and WISA DS, targeting the soundbar market, seeking to establish its technology as the standard for high-quality home entertainment. So far, this is a pretty straightforward story. A niche audio technology company serving a small market. But small audio semis is a tough business. After years of modest revenue and operating losses, the company executed a strategic U-turn, which triggered a fundamental transformation. In September 2024, the company announced the acquisition of patents, trademarks, and intellectual property from Datavault Holdings subsidiaries, Datavault and Audio. This acquisition signaled that the business model had permanently changed. With the acquisition closing, Nathaniel T. Bradley assumed the role of Chief Executive Officer of the combined company. The former CEO, Brett Moyer, transitioned to the role of Chief Financial Officer. On February 13, 2025, the company officially changed its name to Datavault AI Incorporated. This change reflected its new strategy of focusing on data management and monetization, high-performance computing solutions, and AI innovation. After the pivot, Datavault focused on aggressive growth and validation of its new business model based on the Data Sciences Division and Acoustic Sciences Division. In September 2025, the company announced two crucial financial and technological milestones. It secured an initial $150 million Bitcoin investment from Silex Holding to develop supercomputing capabilities and an IBM software license. IBM announced a multi-million-dollar resource commitment with an expected enterprise value of $5 million, including 20,000 engineering hours, to support the growth of the Datavault platform. Furthermore, an alliance was announced with Max International to launch a Swiss digital exchange in Zurich, focused on the tokenization of real-world assets. On paper, this sounds incredible. A company pivoting from audio chips to AI, blockchain, quantum computing, with IBM partnership and $150 million in funding. But here's where things start to get really interesting. The new business. 2 divisions, 1 platform. Datavault AI business model is the ultimate expression of its transformation. The company is divided into 2 main divisions: Data Sciences Division, the new growth engine. This division is the cornerstone of the new strategy and the main driver of future growth. Its focus is on offering Web 3.0 solutions so that businesses and consumers can manage, appraise, and monetize their data assets, transforming underutilized data into structured, monetizable assets. The Datavault Platform. This is the flagship Web3-based software-as-a-service system. It is designed for organizations to acquire, value, analyze, and monetize their data assets, ensuring they retain full ownership and control over them. It uses cutting-edge technologies like blockchain, AI, and real-world asset tokenization. Revenue is expected to primarily come from software-as-a-service licenses and contracts. The exchange markets. Datavault AI is launching a series of revolutionary exchanges that leverage its IP for asset tokenization. This includes International Elements Exchange, raw materials, commodities. Information Data Exchange, a market for tokenized data. Acoustic Sciences Division, the legacy business. This division covers the legacy coming from WISA Technologies and remains a strategic asset and a direct revenue stream. Integrated with recently acquired audio platforms, an ultrasonic data over sound platform. WISA Technology, high-definition, low-latency wireless audio transmission systems, essential for delivering best-in-class immersive sound transmission to home entertainment systems. Audio Technology, an ultrasonic data over sound platform. It is a patented system that uses inaudible ultrasonic tones to transmit data. This innovation complements the data vault, acting as sonar that returns data to the platform. It is applied in asset tracking, advertising, live events, and credential validation. The division generates revenue through the sale of semiconductor modules and software to consumer electronics companies, and through the licensing of audio technology for advertising. Datavault AI seeks to establish a deep competitive advantage that transcends its original audio business. This mode is now centered on software intellectual property, AI-driven data monetization, and the unique capabilities of its acoustic innovation. The company holds a portfolio of over 70 patents and applications covering tokenomics, data valuation, blockchain, and audio technologies. The strength of its IP allows it to impose attractive financial terms. On paper, this looks like a technology powerhouse with cutting-edge IP across multiple high-growth sectors. But let's look at the actual financial results. The numbers, chronic losses, and cash burn. The analysis of Datavault AI's numbers reveals the financial profile of a company in a phase of intense and costly investment and transformation, marked by chronic cash burn and a constant reliance on external financing for its operational continuity. The company's revenues have been erratic and have reflected the difficulties of the legacy business before the pivot. Going from $6.5 million, its peak in 2021, dropping 49% to $3.4 million in 2022, and $2.7 million in 2024. The drastic drop in 2022 and 2023 reflected the difficulties of the audio business. The most consistent and concerning behavior has been the recurring and high operating loss, going from a loss of $18 million in 2022 to $21.1 million in 2024. Operating loss remained consistently high, exceeding $18 million each year. This is because operating expenses, including research and development and general and administrative expenses, far exceed generated revenues. The free cash flow reflects an alarming chronic cash burn, $17.6 million in 2022 and again in 2024. To compensate for this cash consumption, the company financed itself primarily through issuing equity and debt instruments, receiving $12.4 million in 2023 and $22 million in 2024 from financing activities. This cash burn makes the company dependent on constant equity dilution and debt to sustain itself and finance its operation, leading to management to express substantial doubts about the company's ability to continue as a going concern without raising additional funds. Year 2025 reflects the first results after closing the Datavault acquisition in December 2024 and corporate restructuring to Datavault AI Inc. 6-month cumulative revenue of $2.4 million in 2025 and a cumulative operating loss of $21.9 million. So revenue is growing, but losses are exploding even faster. Despite these terrible numbers, the valuation multiples are truly alarming, reflecting the high expectation and speculation the market is placing on the pivot toward AI and Web3. Forward price to sales of 36.7 times, compared to the sector median of 3.6 and its own 5-year average of 3.48. An enterprise value to sales of 39.5 times, compared to the sector median of 3.6, and the company's 5-year average of 4.1. The company is trading at 10 times the valuation multiples of its sector median, despite never making a profit and burning through cash. This brings us to the stock performance. Stock behavior. Extreme speculation and volatility. Datavault AI's stock behavior is the living image of extreme volatility and speculation. The stock has been characterized by a recurrent pattern of operating losses, strong capital dilution, and continuous struggles to maintain compliance with NASDAQ listing rules. The company went public on NASDAQ in July 2018 at $5 per share. On January 2023, the company received a NASDAQ notification of possible delisting because the stock's closing price was 10 cents or less for 10 consecutive days. To maintain the minimum trading price, the company executed multiple reverse stock splits, share groupings, which, combined with constant capital issuances, had a devastating effect on value for existing shareholders. They have also multiplied the number of outstanding shares by more than 100 times in a 2-year period, from approximately 1.97 million in March 2023 to 250.9 million in March 2024, drastically eroding the per-share value. The key acquisition event of Datavault Holdings assets in December 2024 revived speculative interest, leading to a period of extreme volatility. Driven by the AI narrative and series of strategic announcements, the stock experienced an explosive rally of over 700% since September 2025. Then came the Wolfpack research. In October 2025, the stock fell 9.5% after Wolfpack Research, a short-selling firm, announced it had taken a short position, alleging concerns about misleading claims about AI/quantum technology and questionable leadership. And here's where this story gets really dark. The Wolfpack Report. Fraud allegations. Wolfpack Research published a devastating report on Datavault AI. Here are the key allegations. The blockchain platform is a joke. Wolfpack signed up for the Datavault platform and found that much of the data for sale are NFTs, like photos of Dr. Oz, Vladimir Putin vomiting, and a Dean's List token for a community college. Trading activity on the platform appears minimal, if not non-existent. The last known data for sale appears to have been uploaded by DVLT employees attempting to sell widely available historical weather data. The AI and Quantum Computing Center doesn't exist. On October, Datavault claimed it opened its Center for AI and Quantum Computing Excellence in Sandy Springs, Georgia, with on-site data centers and a lab optimized for advanced computing with 22,000 square foot floor plates. Wolfpack visited the location and found a approximately 2,800 square foot office tucked away on the 5th floor of a generic office building in suburban Atlanta. They only saw one person working on site. When they asked a building employee if there were on-site data centers as Datavault claims, they looked at us like we were crazy and said no such thing exists. The $150 million investment is questionable. The company announced a $150 million strategic investment from Silex Holdings. However, Silex market cap is less than $150 million, and it had just $4.1 million in cash at the end of Q2 2025. Datavault claims Silex will receive the Bitcoin by selling stock to Biconomy. Wolfpack's search indicates this entity does not exist. If the deal goes through, it would cause 48% dilution to existing shareholders. Paid stock promotion. Datavault pays for stock promotion, $14,000 for a positive article from Barchart, $180,000 to Investor Brand Network for a year's worth of positive coverage, and $80,500 to Momentum Media LLC. CEO's SEC settlement. The SEC charged CEO Nathaniel Bradley in July 2021 for falsely claiming his previous company Parallax Health Sciences would have a COVID-19 test available soon and PPE available for immediate sale, when in truth, the company was insolvent. Bradley settled and paid a $40,000 fine and was banned from participating in any penny stock offering for 3 years. Bradley omits his role as Chief Technology Officer of Parallax Health Sciences from his company biography on Datavault's website, though it is disclosed in filings. What was the company response? Datavault AI strongly condemned the Wolfpack report, calling it malicious and defamatory, and accused the short seller of attempting to manipulate the stock price for financial gain. CEO Nathaniel Bradley has emphasized the company's innovation and strategy above the market's short-term noise. These are all serious allegations that warrant a deeper review of the company if you're considering investing in it. If you want to read the full report, you can go directly to the Wolfpack Research website and download it, where you'll find many more details on each of these allegations. So here's the brutal truth about Datavault AI. This is a company that was selling wireless audio chips and struggling to survive, burning cash, diluting shareholders, facing delisting from NASDAQ. Then it pivots to AI, blockchain, and Web3. Suddenly there are announcements about $150 million investments, IBM partnerships, and revolutionary technology. The stock rallies 700% in months. But when you dig deeper, the picture gets very dark. The financials are terrible. $21 million in annual losses, $18 million in annual cash burn, completely dependent on dilutive financing to survive. The valuation is insane. A short seller report with very serious allegations that call for a much deeper analysis of what's really happening inside this company. Is everything in the Wolfpack report true? I don't know. The company denies it and calls it defamatory. But here's what I do know. This is an extremely high-risk, highly speculative penny stock with massive red flags. If you're thinking about investing in DVLT, you need to understand you're not investing in fundamentals. You're speculating on narrative, momentum, and hope that the AI pivot is real and the accusations are false. This could be a revolutionary company that transforms data monetization. Or it could be one of the most blatant pump and dump schemes in recent memory. Only time will tell, but the risks are enormous. So what do you think? Is Datavault AI the next AI revolution? Or is this a cautionary tale about penny stock speculation? Drop your thoughts in the comments, and if you own shares, I genuinely want to hear your thesis. And if this deep dive was valuable, hit that like button and subscribe to the Capital Navigator for more in-depth analyses of the companies changing the world. Thanks for watching, and see you next time.